Hey, folks, my guest today is Matt Kilmartin. He's the CEO and co-founder of Habu, the global innovator in data clean room software. He's passionate about entrepreneurship and developing technology to help brands and their digital transformation. He's got 20 years of experience in his career working for innovative software and data companies such as Salesforce, Crux, and Akamai. Matt, you ready to take us to the top?
Let's do it.
All right. So what does clean room software?
Yeah. So what it basically means is two companies that have data who have a common business interest to collaborate around each other's data, but they don't necessarily want to give each other their data, right? So meaning clean room software is neutral infrastructure where two parties can effectively do analytics across distributed data sets.
This is cross-beam space.
Not really, I would say.
Okay. Because that's the closest. Like I try and pattern match.
What's interesting is a lot of the cloud data warehouses do this are doing this now. So AWS, GCP, Microsoft are trying to do this, and that's where data sharing now happens at the cloud data layer. And then Snowflake and Databricks have capabilities around this as well. And so
maybe for my audience, give some use case. So the use case I have is you potentially are going to partner with a company. You want to share email lists. Crossbeam is like sort of how you do this anonymously without like giving up data. What's a use case people use you for?
So a use case for us is we work with a lot of, so I know Crossbeam because we use it. And a use case for us is Disney. Disney's a client. Disney owns Hulu, ESPN, and they have all the TV viewership data basically. L'Oreal is a big advertiser, and they want to know what are all the Disney and Hulu. What do you know about my customers, basically, right? So Disney doesn't want to give all of their data to L'Oreal. L'Oreal doesn't want to give all their data to Disney. They use our software to do data collaboration. So
I see.
Big media companies like Roku, Disney are examples of clients, and then also another big one is with retailers and manufacturers. So like grocers and people in CPG companies.
Interesting. Are those your two big use cases, Disney and Hulu and grocers and CPG?
Those are, and we have other verticals as well that we're successful in, but those are media entertainment, retail, CPG, advertising. Those are a lot of the use cases at which people are using our software for today.
And are Disney and Hulu both paying you, or is it one side of the marketplace?
Today it's one side of the marketplace.
Disney or Hulu?
Well, Hulu is part of Disney, actually.
I go with the comparison here: grocery store or CPG chain.
It can be either. Actually, it depends who the actual licensee is, right? So it could be the grocer if they're the ones saying, "Hey, we're standing up an environment for all of our CPGs to collaborate with." It can be the grocer, but also it could be like L'Oreal as a client. And L'Oreal is basically saying, "Hey, I want to go work with all the beauty. I want to work with the beauty people. I want to work with my sponsorship people," and they can basically influence it as well. But our we want to make it friction free for data collaboration, so we are not charging both sides.
I see. Okay, so you're charging one side, and what is one side paying your current customers? One side paying on average per month to use the tech?
Yeah, well, per month we look at it sort of at an annualized basis. So our average ACV is by mid 300K range.
And how do you get someone paying 600K? How do you upsell?
Consumption. So when someone buys our software, they get a certain number of data clean rooms or slots for collaboration. And as they use them and as they use more, they grow and there's an upsell opportunity.
Okay, so let me try and give an example. Let's say HEB, the grocer, is paying for your software. They have X number of slots. A slot might be filled by Procter and Gamble because they sell Dove shampoo and Dial. Okay, that's how it all works.
Yes. Yep. You got it. Your quick study.
Okay, interesting. Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your Founder Path dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right, so the teal is what a VC would pay, yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise, they sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of Founder Path, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. Okay, so your upsell, that's a powerful upsell is number of slots. Are there any other sort of very powerful upsells here, number of seats or no?
We don't have a seat model right now. It's more based on as people are consuming more slots in collaboration.
Okay, interesting.
Then also, we're starting to look at some different modules as well, right? So sort of version 1 of the software was around, let's just stick with the L'Oreal example. L'Oreal has their beauty customers, right? That's a data set. And then there's a data set with, HEB or whoever else. We're starting to do now things more on machine learning, where they might have machine learning models built around skin types or propensity to buy other products. And how do you now start to do machine learning on other data sets? So that would be a more advanced module. But out of the gate, it was sort of more data to data. And now it's more advanced modules are around ML and more model to data.
And when was out of the gate? When did you launch?
We've been at it for 3 years, built technology for a year, launched commercially 2 weeks before the shutdown. So March of 2020 is when we launched commercially.
Mm-hmm. And what was that like? How'd you get your first customer?
Begged, borrowed, stealed. Listen, it was a weird time, right? Because as you can see by our price points, it's kind of an enterprise sale and we're selling to big brands. There wasn't a lot of appetite for companies to enterprise buying at a time during COVID in the beginning. And so we had to get super flexible. And so we actually did some shorter term deals. We call them first value deals, where instead of letting someone sign up for a year, we'd have more flexible terms and start using our software. And we probably did, interestingly enough, of all those deals we did sort of 6-month deals with to do sort of POCs or first value engagements, every single one of them has continued on as a customer.
How many POCs have you done to date?
Now we're done with the POCs. That was like 2 years ago.
Okay.
Like that was 2 years ago when we first launched. Now we're doing proper.
But take me back, because there's so many of my listeners that are in that state, right? They're launching POCs to get going. How many did you have to launch, and how many converted to paid, and what did you learn?
Oh yeah, great question. So for us, because it's like enterprise, it was less around volume and quantity and more around quality, right?
Yep.
So, like one of my good buddies is the founding revenue leader at HubSpot, and obviously their model is very different, right? So for us, it was all around like quality of fit, and then also really handshaking with those customers around mutual success plans, right? So that would be my advice: is like, you don't know your ICP, you're trying to figure it out. Place a few bets, place a few different types of experiments, identify what your learnings would want to be. Obviously, you want sort of the money, but really the money's like a short-term thing, but it's good to get
Yeah.
money because you want there to be some skin in the
Matt,
game.
how many of those bets did you place though? Are we talking like 5 Disneys or 5 grocery chains or 5 or
We
10 or
could have
50?
we placed probably 8 to 10 bets.
Okay, 8 to 10. And then what does that sound like back then? Was it like, listen, here's what we're going to try and deliver over the next month or year or 15 days. And at the end, it's going to cost you this if you're happy. What was the timeline and what was the cost if they were happy?
It was more, it was probably more of a 90 to 120 day window of make happy value realization. And then we didn't break our pick, honestly, if it's going to cost this, right? We were really just focused on delivering great product, delivering value. And we said, if we do that, it's going to work itself out and we'll have a proper business conversation.
Oh, so you didn't try and set an anchor at the beginning of the POC to say, if we work hard to make you happy, it will be 30 grand a month.
No, it was COVID. It was in the beginning of it, right?
You just negotiated at the end.
Yeah. So today, maybe we would be a little bit different, but yeah, I mean, it was a different time, right? And
interesting.
This is an in-person sale. It's an enterprise sale, and so all of a sudden we're trying to do it over Zoom screens. So we were flexible early on, and it served us well.
Yep. How many today? How many customers?
Oh boy, we are south of 50 still.
Okay, 50. When do you think you'll break 50?
End of this month.
Oh, you're close.
Yeah, we're close. We're growing a lot. I mean, because you think about it is, okay, so let's just stick with your HEB and Procter & Gamble.
Procter & Gamble. Yeah.
Yeah. So Procter & Gamble, they might not be paying us, but all of a sudden they're collaborating with HEB, so they're getting exposure to our software, right? So all of a sudden we have a nice network effect where you could potentially go and have a conversation with Procter & Gamble. So it's still an enterprise selling motion. We're working hard to identify some more product-led growth, and that's an area for us that we're focused on right now. But we're definitely it's a hot category. I would say there's RFPs out there right now. A lot of people are thinking about it.
Yeah, it's not just. By the way, that's not just a nice tactic to have. I mean, that is a golden staple of the fast-growing SaaS companies, right? You look at Bill.com. I learned about Bill.com because someone told me that they only were going to pay me if I signed up for Bill.com because they were already using Bill.com. It's the same sort of thing for you. You know, Dial, Procter & Gamble uses it via HEB. Then Procter & Gamble goes, wait, we work with hundreds of retail partners. We should buy our own licensed copy of this to use it.
Yep, you're exactly right.
That's a great trait to be able to have, which is nice. Now, did you intentionally plan that going in, or was that like a nice accident?
I wouldn't like to say the word accident, but no, we didn't. I mean,
you were hopeful.
Yeah, I mean, listen. I was at Salesforce, so this is my second startup, right? My last.
You were
startup,
at Salesforce in 2018 when you launched in 2019.
I resigned from Salesforce 3 days to the day after they acquired my last company. So I was at a company called Crux, which Salesforce acquired. I was the CRO at Crux, so I was.
Did you make a lot of money in that acquisition or no?
Did I personally, or did the company?
Yeah, you as CRO. I mean, maybe you had 1 or 2% equity, or not. I don't know.
It was a good outcome.
Okay.
Yeah, I mean,
not FU money, but like, it's comfortable money.
Yeah, I'm still working.
You're doing what you love, though. Come on.
Yeah.
I mean, this was not a small deal. This was not a small deal, though. I mean, this was, I think, a $700 million deal, if my memory is right.
Yeah.
Yes.
Yeah. But listen, Salesforce is awesome. I learned a ton there. But what I also learned was when there's rapid change and there's chaos in a market, you need innovation. And sometimes it's easier to innovate when you're a really sort of small company starting with a clean slate.
How long were you at Crux?
Almost 5 years.
Oh, come on. He's underselling himself. You had some equity there. That was a very good exit for you. Did you plow any of that money back into Habu or no? So you could say bootstrapped at the beginning or no?
So Habu was actually launched inside of a venture studio. So the founders of Crux started a venture studio. It's a fund called Superset. It's a $65 million fund, and they start startups. They're not VCs. They actually started 10 companies in the last 3 years.
So how did you get involved?
Well, I was thinking about starting my own thing, but I'm not an engineer. And so I needed a technical co-founder and to go hook. And these guys are my old bosses, right, from the last company. And so to go work with them, I basically had instant access to world-class engineering talent and plenty of capital to get going, right? And so we raised a Series A right as I came in. We actually just closed our Series B. Snowflake invested in us actually as well.
Oh, nice.
We're off and rolling now.
Quantify those for me. What was a Series B? How much?
25 million.
And that was a Series B. When was a Series A?
Series A was November. Well, we announced it February of 2020 is when we announced it.
Feb 2020. Okay. And how much was that
End
for?
of 2019 is when we really closed it.
Okay. And how much was that for?
13.
13. And that's when you came in.
Yes. Right then. Right when we closed that.
Did the Series A investors, was that a contingency? They had to bring you in as CEO?
Superset actually leads the rounds as well. And so it's people I've worked with forever, right? So it's not, yes, we sort of mutually agree, but was not necessarily contingent. Like they had been incubating and building some tech as well, trying to think about ways to solve this problem.
Interesting. Okay. So got it. So you go into this. So help me understand, if someone else is listening right now going, I am just like Matt, I need to go find a venture studio where I can be the CEO of one of their companies and spin it out. I mean, how does that cap table shake out? I mean, do you look at Superset like a 50-50 sort of co-founder effectively, or are you way under 50% equity in the business?
I'd rather not get into the specifics of the cap table for Habu. There are other venture studio models out there. I think Superset's a little bit different than like Y Combinator and some of the other folks like that, because they play sort of very operational roles. So the sort of the CTO, who actually was the CTO of Salesforce's Marketing Cloud and CTO of my last company, he was the CTO of Habu for 2 years. The other Superset partner is actually chairman of our board. So they're pretty active roles. Now that we've sort of raised our Series B and we're a bigger company, they've sort of taken a back seat. But yeah, I mean, listen, the cap table sort of appropriately represents the different inputs of where people are adding value.
Fair. Yeah. Thanks for that context. And then look, most people Series B, you're selling, 10 to 15% of the business. Were you guys sort of in that same range?
Sorry, say that question one more time.
Most Series Bs today, SaaS, B2B SaaS, you're selling 10 to 15% of the business. Were you guys sort of in that standard range?
Yes, we're in that range.
Yeah. Okay. Fair. And then take me through.
I gotta tell you though, Nathan, I should probably do a better job paying attention to all these details. I'm more focused on trying to grow the company rather than staring at the cap table every day.
Well, let's talk more about that. So 50 customers today at a $25,000 ARPU. I mean, that puts you at about 1.2 in monthly revenue today, correct?
Ish, yes.
How do you go from 50 to 100? Let's talk about growth.
Yeah, so we, for a long time, and for people listening out there, I'd be happy to feel free to ping me on LinkedIn or share war stories. We stayed a little too lean too long on the sales and marketing function, I would say. We had a ton of product engineering, but I felt like we probably could have invested earlier in sales and marketing. And so we in the end, there's other people in our category who are a lot bigger, right? We're an early stage company, and they're doing a lot of marketing about the category. So a rising tide lifts all boats. So we're benefiting from the category expansion, but we need to do better. And we have a better product, but we need to do a better job, sort of increasing awareness around what we do. So,
Matt, who are those? Name one or two in your space that are sort of educating the market.
There's a public company. They're also a partner, and a great partner as well. But there's a public company called LiveRamp who has a competitive product. So, anyways, but listen, great company. We actually use some of their identity products as well. Classic co-opetition. But what was the question you just asked me? Oh, how do we grow? Yeah, listen, we're adding salespeople, and we've got I think at this point, and you've probably heard this, talking to a lot of different other founders, it's about defining your selling motion. How do you try to repeat it? Like we're going through, all of that stuff right now. And really, how do we try to codify it even more?
Yep.
And accelerate it.
What is your team today? How many people full time?
We are just under 50.
Just under. Okay. Got it. And how many of those are engineers?
Oh boy. Half.
Oh, wow. Okay. And how many are sales reps with a quota?
6, maybe.
Got it. And did you hire your first quota carrying rep like pretty recently? This is a pretty new motion for you?
No.
Okay.
We had one early on salesperson, and she's a total, she's a rock star. She was, me and the executive team was all involved in a lot of these sales, and we had a lot of contacts, right? Just from our last project as well, and last company. So, but we had an awesome sales executive who's been with us sort of since the beginning, since day one. And then sort of middle-ish of last year, we've been adding. Now we have a chief revenue officer as well. who's got a lot of domain expertise. She's awesome. So the one fact, which is rare in sales companies, our sales force is about 75% women, which you don't often see. Yeah.
Very cool. That's great. We love hearing that. And it sounds like, I mean, from a growth perspective, if you're doing, 1.2 a month today, where were you exactly a year ago?
Oh boy. I should have invited my COO and CFO to answer all these questions.
Oh, come on. Don't act naive. You told me before you listened to the show, you knew all these questions were coming. Or just give me a growth rate. I guess you're going.
Yeah, listen, we're like, like we sort of have a mantra of like triple, double, right? In terms of growth expectations. And so we're on track for that.
So, well, it depends on when you start triple, double. So did you double last year or did you triple over the past 12 months?
Our fiscal year actually just ended Jan 31. And so we're still finalizing things with our board meeting next week. So I'd rather not.
Such a political answer. Okay, Matt, you at least double.
Your listeners aren't going to learn anything from me telling you these numbers. It's more about.
Of course they are, because it's all it's much better than you saying like fluffy duffy. We had a big failure and So, but just listen, I mean, somewhere between doubling and tripling last 12 months. Is that a fair statement? Okay, 100%. Got it. And okay, cool. So Series B, why raise 25 million? That's a lot of dilution. Where are you spending the money?
Could have actually raised more. It's actually not. Yeah. Listen.
I mean, by the way, if you're doing $1 million a month right now in revenue, right? Which, by the way, is pretty high, $240,000 in revenue per employee with 50 people. So I'm assuming you're actually a little less than probably $1 million right now per month. But let's say you're around that.
Yeah, because I sort of quoted the average price of some of our deals more recently. There's still some of those early on deals which were a lot more flexible and smaller, right? So the numbers don't all tick and tie as well as.
But you're flirting with $1 million a month in revenue. I mean, you're around there.
We're on that track. Yes.
Yeah. My point is, you traded at somewhere around a valuation multiple of like 20x. I mean, I know others in your space, not your space directly, but with their same metric set, they're trading at like 30, 40x, right? So like, I'm just trying to get a sense of how you guys thought about dilution.
Yeah. Listen, I think we had a unique opportunity with our partnership with Snowflake, and we partnered with Snowflake, and Snowflake Ventures invested in WOW, and I think Snowflake's a great product, and we built a bunch of our technology on it, and it made sense to listen. I saw the power of distribution at a company like Salesforce, and if you can do a partnership with Snowflake to help people sort of drive more compute with Snowflake, like we can get the potential benefit in partnering with them from a distribution perspective. So. That's why it made sense. That was one of the reasons. And also the market's hot.
Yeah, no, I agree. That's a great answer. Last question. Are you flying traditional model with your 6 quota carrying reps? Or are you have them, aiming at 5x their OT in terms of quota? $100 million quota target. If they hit quota, they make something like, $250,000.
It's funny. I actually missed that meeting this morning where we're actually going through those specifics, but yeah, quota will probably be a little bit higher than that. And, I'm actually a fan of 6-month quotas at this stage of a company still a little bit, because I feel like, we're still trying to figure it out. Listen, I love, salespeople who make 300% of quota, blah, blah, blah. But it's like, yeah, well, guess what? Your CFO is going to change the goals next year, right?
Yeah.
And so we want to make sure that we're appropriately compensating people, but we're also not setting the bar sort of too low. Everyone's a shareholder, and so.
All 50 people own equity. An options pack comes with every offer.
Yes.
Oh, that's great. That's nice. So you do 6-month quota. So what, like $600,000 is the target for 6 months in terms of quota, 1.2 for the year, something like that?
Something like that. Yeah.
Yeah. Interesting. Very cool. And how do you split it up amongst the reps? Is it geography based or some other way?
It's funny. It's a hot topic right now internally. Because I think we're actually we're literally making these decisions today. I think we're probably going to move to some sort of a blend where it's actually more vertical, which I think at our stage is not that normal. But I think given the nature of what we do, that vertical expertise is really useful, right? If someone can talk that HEB game and go talk it everywhere else, that's a good thing. So that's how we're thinking about it right now.
Especially because it sounds like you have a very clearly defined 3 or 4 key areas that makes complete sense to me. Super interesting. And then talk to me about, you mentioned how you're able to drive expansion based off number of slots and also module upsells. Was your net dollar retention over the past 12 months greater than 100%?
Yes.
How far? 120?
Yes.
Not sure. That's a yes on 120.
It's a podcast. People can't see my face.
All right, fair enough. Yeah, but we already understand how you're driving it. That's obviously healthy metrics. Are you doing a bunch of stuff in terms of paid marketing? Like, do you have a real CAC here?
No, not yet. Actually, in fact, we just hired a CMO who's coming on board. Yeah. So, yeah.
Snowflake offers $500 million to buy the company tomorrow. Do you have to sell?
I don't want to answer that question.
Are you in acquisition talks right now with Snowflake?
No.
Do they have a ROFR because they led your Series B?
Let's not get into the specifics on that.
You guys can read his face and learn. You guys can read his face and figure it out for yourself.
All I'll say is, we have great investors, and if people want to learn about this type of stuff, talk to your investors, right? I had great counsel from our chairman of my board and our investors on the best way to get the partnership. And honestly, that's the thing I would actually say. And I would even say this from the Crux days is, there's a lot of capital in the markets today. And I would encourage any entrepreneur to really focus on value-added capital. And I'm super fortunate to have that, not just from Snowflake, but also from some really awesome investors. And yeah, we probably could have gotten better terms from people and whatnot. But at the end of the day, you want people that are actually going to make you better. And I feel super fortunate for the investors that we have, and I think they push us to be better. So
yeah, I mean, it's not an easy decision though, right? The reason I bring this up is deciding to take capital from a much larger player in your space, i.e. Snowflake, is both an advantage because they're more likely to distribute your software. It's also potentially a disadvantage. Is LiveRamp less likely to acquire you because Snowflake is a major investor? Do you limit your options moving forward? So there's a give and take.
Yeah, I think so. But at the end of the day, Snowflake's not looking to restrict our TAM, and we have to be agnostic.
Yep. So, well, we'll see what happens, Matt. In the meantime, though, let's wrap up with some fluffy questions here for you. Number one, favorite business book?
Oh boy. Most recent business book. Let's do that one. I actually just read the CEO of Snowflake's book, Amp It Up, which is actually a pretty good read. So I just read that.
Amp It Up. Number two, is there a CEO you're following or studying besides Snowflake?
Yeah, I would say actually the chairman of our board, Tom Chavez. He actually is the CEO of a portfolio company as well. He spins a lot of plates, and I'm fortunate to have had him for a mentor for a long time. So
what do you mean portfolio company? Are you an LP in Superset or something?
No, Habu was incubated inside of Superset, and so it's part of the Superset portfolio.
Oh, I see.
And so he's our chairman. He's a CEO of another company as well, but he's the CEO I probably pay the most attention to.
I see. Number three, what's your favorite online tool for building Habu?
The telephone. It's underused today in business.
Number four, how many hours of sleep do you get every night?
Sleep's important. Between 7 and 8.
Okay, that's good. And situation, married, single, kids?
Married, 4 kids.
4? Holy crap. How old are you?
47.
Okay, last question, Matt. What is something you wish you knew when you were 20?
Say that one more time.
Something you wish you knew when you were 20.
It's a marathon, not a sprint, and the importance of managing your own psyche.
Guys, there you have it. Matt was at a hot startup that sold to Salesforce for $700 million. After he cut his teeth there, he said, I'm going to jump out, launch my own thing, but he didn't have any technical skills. So what he did is he partnered up with a venture studio called Superset to spin out this company called Habu.com. They're growing nicely. Call it 100% year-over-year growth or 200% year-over-year growth, doubling or tripling last 12 months from 500 grand up to about $1 million, called $1 million a month, flirting with it in revenue across 50 enterprise customers. Just closed a Series B, $25 million with a critical partner in Snowflake. They sold, call it 10 to 15% of the business. Now looking to scale their sales team, total team of 50, 6 quota carrying reps. Really excited about the space. We'll see what happens next. Matt, thanks for taking us to the top.
Thanks. It was nice meeting you. Appreciate the opportunity.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.